How we doing? Welcome back to another case study. This is 12/29/23. As always, I'm a developing student. These are just my interpretations on price. Let's get straight into it. As we can see, what is current order flow? Current order flow is bullish. But if you look at NASDAQ, we're gonna have like two consolidation candles. We're lacking expansion. We're failing to expand here. So that could trade this fair value gap here on the daily, the small little balance, as a area which the market does want to retrade into. We also have this big down close candle, maybe 50% of that could be where we could want to trade into. And then we also have this big imbalance leg within price that we might want to seek to rebalance, at least maybe this imbalance and this imbalance to offer fair value within the market. If we look here on ES as well, we never created a daily imbalance here, and then we have this big down close candle here, so we might want to trade the mean threshold of this. We didn't reach it in this day here, but we had a consolidation candle. Anytime we have a consolidation candle, a doji candle, whatever you want to call that, we're likely, or those are optimal candles to look to either retrace or expand. Since we had a down close candle, we might show some down close momentum here on the 1 hour or 15-minute chart. This could lead into one type of candle like this, which is what we end up happening. So here's the 1 hour structure to these respective pairs, or I always say pairs. I don't know why. I think it just sounds better, but of respective indices. As you see here, we end up having a nice sell-off. And as you can see, we end up forming SMT here at these highs within the hourly imbalance. That's what that doji candle looks like. And then here is midnight opening. The midnight opening price, we end up manipulating, forming SMT right there. And then we end up displacing lower. Notice how ES has come up and taken these highs within this imbalance, within this these last up close candles here, the series of up close candles here. NQ isn't really close to that. Oops. NQ isn't really close to that, and then we end up displacing lower, creating another imbalance leg on price, and then we end up retracing into that and end up displacing lower. So here we have a classic London high day situation, where classic sell day, we have high day in London, we have London that comes up, puts a high day, takes Asia low, previous day high, something like that, and then we end up displacing lower, and then this is a 15-minute time frame, and we come back up, we trade into this order block, into this fair value gap, right, at a certain time of the day, and then we end up displacing lower to offer sell side within the market. And also this breaker. I mean, the breaker that I have mapped out here isn't the cleanest, but look at how well it respects that. I would more refer to this as an area of mitigation, because maybe this might be the breaker, but I'm framing this as the breaker just because it has more narrative around this. This was kind of in the PM session, Asia session, so I'm kind of going to ignore that. I'm going to more refer to this one because it happened recently. It happened PM session, and that's what we end up tapping into. We're also tapping to that around the fair value gap and order block level. And then we look at the bodies of that, and but we end up displacing lower. So here we have market open delineated here. Here we have the market open price, and then this is the 8:30 a.m. price. And where's the low resistance liquidity at market open? It's this that we've generated right here before market open. We're going to push up. We're going to first induce breakout traders, and then we're going to push up, and then we're going to expand at a certain time of the day, 10 a.m., and then we're going to distribute lower at that certain time. But notice, where is the market likely going to head? Like, what direction? We have SMT at the highs, so we have high resistance liquidity signatures at the high. We keep on rebalancing imbalances, bearish imbalances, and we keep on running through lows. This is just a retracement into optimal trade entry of this price leg right here, into this imbalance right here, into this breaker here, into this order block here, to then just end up displacing lower. And just look at the sell that occurred within here. And here is I'm just denoting the low resistance liquidity that we have at around market open. As you can see, if we look out, if we zoom out, we have all these lows here. So it is more probable for the market to head to this direction than it is to head towards this direction. Doesn't mean it can't happen, just means it's lower probability. And we know that this will play out more times than it won't. All right, and here we have a little breakdown of that 5-minute chart. We have sell side liquidity. We have 8:30 opening price that we manipulate above. Since we are, the reason why I did mark 8:30 open is because we are not within that 12 a.m. opening price. I don't believe we are within that true day opening. Oh, actually we are. If you project out that true day opening price, we are manipulating above that as well. So that's extra confluence. And then right here, market opens, we push down, we entice sell stops, and we come up right into that imbalance. and then change state delivery on the 5 minute, and look at that order block gets respected, and then boom, we have a nice sell-off that occurs at around that 10:30 a.m. Here we have the 10 a.m. silver bullet. Again, this is a 2-minute chart. We have a change of state delivery on the 2-minute imbalance right here. A market structure shift, pullback for value gap. Classic 2022 buy side taken, displacement lower, pull back to imbalance, pull back to optimal trade entry of this range from this low to this low. And then we end up displacing. We come back down into this order block, into this mitigation, and then we end up displacing lower there. All right, and here is denoting the low resistance liquidity signature that we had at market open. We end up displacing lower, and then we end up reaccumulating within this gap here, and then we end up coming back down to that low right there. And then this right here is a new day opening gap right there that we end up coming back into and retrading into, offering fair value within that before then having some form of buy program just to seek to rebalance price. And here's that new day opening gap. And here is lastly the 1-minute chart. Sorry, I don't know why I had this kind of later, but here's the 950 macro. 950 macro starts the sell side delivery 10:10. Right as soon as 10:10, we end up displacing lower. We have all these low resistance liquidity signatures. And then look at this 1-minute breaker, the last down close candle before buy side gets taken. This is going to hold significance. Market looks to trade back up to that. The algorithm looks to trade back up to that to offer fair value to the market. We don't need to trade in this fair value gap. This can be a breakaway gap because of that breaker. Boom, breaker right there, and then we end up displacing lower. That could have been a entry in case if you missed any entry right within here. And here we have that. Here we have that second stage of accumulation or distribution. And notice what time this happens. It happens at that 10:50 macro. Notice how these signatures are happening at certain times within that 5-minute macro, and then boom, we end up displacing the sell side. And lastly, I have standard deviation marked out of this fractal from this high to this low, and then boom, look at -2, -0.5, possible reversal area. If we want to respect this, we will probably head to a pyramid PD array. We come back up, we reaccumulate with the or redistribute into this silver bullet area. That's exactly where we end up having the silver bullet. I didn't swing grade this. I feel like I should have, but I never. I didn't swing grade that. And then boom, we ended up expanding right to this -4 level, and then we form an SMT in the market, and then we end up having an order block, and then we end up repricing a buy side. And that's exactly what we're about to go over. So new day opening gap has been traded into. Buy side liquidity or sell side liquidity has been taken. Here's a 5-minute chart. We end up forming an SMT at that new day opening gap. We end up having a change state delivery on the 5-minute, and then we have this imbalance here that will likely look to get rebalanced. Notice how the old sell side liquidity also matches up with that imbalance, and then that's where we look to rebalance price to. We've already repriced this imbalance, so this imbalance is going to be more likely to get traded to if we want to rebalance imbalances. All right, and here is a 1-minute chart. We end up getting a move higher, and then a move back lower. SMT gets formed here. So this could have been a sell model actually on ES. Could have been a sell model on ES. I didn't denote that here, but as we can see here, we have a fair value gap in, fair value gap out. That becomes a balanced price range. Price reaccumulates right here within this fair value gap. This fair value gap gets sensitive because of this down close, because of this fair value gap. And then boom, we have that mitigation block that we trade to the tick. We end up expanding, and then we end up reaccumulating within this 1-minute fair value gap. We have a 1-minute change of state delivery right here. That order block gets respected nicely, and then we end up coming to buy side within here, and then into that imbalance as well. So yeah, this was a PM section reversal after having SMT. The market's already expanded quite some time. It's quite much to sell side. So we're gonna look to offer buy side because of that SMT and that 5-minute change of state delivery. All right, and here's just some standard deviation projections. I know it's a little bit messy, but here we have that fulcrum point from here to here. That's technically your first retracement leg right there. That's what I used to frame this projection. And then this projection, I used this fulcrum point from here to here. So that expansion move. And notice where reaccumulation happens with the market. And -2, -2.5 lines up nicely with buy side. And here's the overall profile that we had. We ended up having a classic sell day. We had accumulation overnight, and then we had manipulation, or we had manipulation, London high a day. For SMT, the fact that we formed a higher time for SMT makes this profile what we want to see. Whenever, or what we're just gonna note, because these are case studies, we had London high of day with an SMT. London high day put that SMT. If we didn't have an SMT, we likely wouldn't have had, or we maybe still would have had London high day, but the fact that we have SMT makes this London high day significant. We end up breaking lower. We end up having 9:30 manipulate lower, push higher, and then 10 a.m. started to break down lower. Notice as well what we traded into in New York AM. We end up trading into a breaker, or into this old area of resistance right there, and then we end up displacing lower. And then 10:50 we end up having that second stage of distribution lower, and then we end up liquidating sell stops at 11:25. We end up having this reversal within the market, and then 1:30 offers another expansion leg higher. So here we had a classic sell day. We had open, true day open right here, open high, low, close right here. Notice how the close is happening back within this range. This already is a significant range of price, and then the market forms the SMT, and then we end up repricing higher, and then having to close back within the range. So yeah, that was the price action of this day. I will continue to do these and continue to have these posted out.